Hello again, everybody. Doing it from the RFX Forex and Trading. The pound Canadian dollar provided us with a strong trading gain of 175 pips today as the market declined as predicted in favor of the Canadian dollar following the formation of this strong double top formation and the break of this uptrend line. Now, all of this was taking place within the context of the formation of this range setup, which is taking place with the formation of these bullish and bearish waves. So we were expecting the market to provide us with a fourth wave that would lead to the completion of this overall range setup. Now, when it comes to trading consolidations, some persons try to wait until the market has completed the formation of a consolidation and then trade within them, or wait until the breakout takes place. But what I found is that once you're able to identify when the market is forming these waves that lead to the formation of consolidation, you can take advantage of them by trading the signals given before the market actually forms the consolidation. So you're able to take advantage of the waves that lead to the formation of consolidation and then continue to trade within them while the market is once a consolidation has been formed, and then you can also trade them when the breakout actually takes place. So the key to this and the basis of this trade is being able to identify the types of setups and the types of candles in particular that tell us that the market is forming these consolidation setups. Once we have identified them, and once we have a pretty good idea of the type of setup and where we're going to be forming the next resistance point or support point, we can then wait for the market to provide us with a strong trading signal to then take advantage of these movements to capture strong trading gains. In this case, the market provided us with a strong double top formation and a break of this uptrend line. Two strong bearish indicators that told us that the market was going to be headed lower over the subsequent couple of days. And after a couple of days, the market provided us with a strong trading gain. Now, to take advantage of this expected decline, we went to the 4-hour chart to look for a trading opportunity once we saw this strong trading signal being completed with this strong daily candle. So on the 4-hour chart, you can see how we actually traded this setup. You can see that the market formed this strong U-turn setup with the break of this counter trend line that was also formed, which, as you can see here, is a very strong signal to indicate that the market was going to be continuing the downtrend as part of that expected decline. So what we did was to identify our resistance area where we would place our stop loss, which, as you can see, would have been or is a strong stop loss area when it comes to downtrends. And this was identified at 172.43. Now entry took place at 171.28, but it could have also been lower, but the lowest that we could have got to enter this market at would have been at 171.23. The reason for this is that a maximum stop loss of 120 pips was set for this trade. So that means that we could not have entered at a price below this without violating our 120 pip stop loss rule. Target was set at 169.53, and this would have provided us with an entry with a strong trading gain of 175 pips. And after a couple of days, market hit our target to provide us with a strong trading gain, as you can see here. And what you'll also notice is that shortly after the market hit the target, we then saw the market rally in favor of the pound quite sharply and end the day higher in favor of the pound. So this is confirmation that our trading target was accurately set and that this trading target was the trading target of most of the major players in the currency market around the world. It also shows that most of the traders were able to spot this trading opportunity, perhaps with similar trading strategies, perhaps with different trading strategies. But the common element of this movement was the fact that our strategies coincided with theirs in being able to predict where the market was going to pull back and where we needed to exit to maximize on this trading opportunity. So a strong trading gain, another example of how we can take advantage of the movements that lead to the formation of consolidation, and how we can accurately predict and target strong trading gains ahead of pullbacks. So in summary, the main aspects of this trade was that we were taking advantage of the waves that lead to the formation of consolidation, and once spotted, using the techniques that we have in the trading manual, we can take advantage of them and capture strong trading gains. This is going to be done by trading the strong daily signals on the daily chart. These signals have to be very strong: double tops, double bottoms, ABC signals, and evening stars and morning stars. Those are the most common trading signals that we see when it comes to trading within consolidations, which you'll also see in the trading manual. And once they're strong enough, then they're a very good indication that we're going to be starting another wave, and that we can look to take advantage of the movements that are going to take place following these signals. Another important element is that whenever we're trading on a 4-hour chart, the setups that are associated with these movements have to be strong enough to justify the trade. Once we have a strong enough stop loss area on a 4-hour chart that will protect the trade against pullbacks that take place along the way, then we can aggressively and confidently trade the setup and set our trading target. And of course, the most important thing is that when it comes to swing trading, we have to be extremely disciplined and patient to hold our trades for several days until our trading targets are hit. In this case, the market took approximately 2.5 or approximately 3 days to hit our trading target, but in some cases it may require more. And so the discipline to hold our trades for several days is going to allow us to maximize on these types of movements without falling to the temptation of exiting too early, monitoring our charts, and becoming jittery ahead of temporary pullbacks. So by staying disciplined and keeping the trade open over several days and not looking at the trade altogether, we can maximize on these types of trading gains from week to week and ensure that we have a consistent rate of gain for the long term.